Now, the second part of this is understanding the investor psychology and behavior, because it impacts what you say. It impacts how much money you spend at any one time. What happened during the big crash of a couple years ago was the investor moved into paralysis. They weren't willing to do anything. And then it progressed to fear. And from fear, we had a whole situation where the investors still were not really buying product, responding to lead generation, investing. But then, after the market turnaround, especially around the summer, it moved into the area of skepticism. And in recent months, it's moved into the area more and more from skepticism into greed. Well, now, because of the market crash that we just had, you bump people back into skepticism and back into fear. I don't believe we're going to be seeing paralysis, but we're going to see a much more reluctant audience. So depending upon what happens in the next week or 2 weeks, and depending upon what was the cause of this, one of the analysts recently mentioned that it was a lot of selling because of automatic stops. A lot of people were talking about the fact of the taxes, the historic tax increase that's coming next year because of the not renewing the 2003 tax cuts, or was it something else? We don't know. When the investor begins to see what happened, is going to depend where they're going to be in the coming months. Now, as a marketer, if you know the cost per lead and cost per sale, whether you're in a period of fear, skepticism, greed, a mixture of that, you'll be able to know how much you can spend and how much you can't have to pull back on. There's key emotional triggers in marketing. Avoiding losing more. That has become so much stronger because of this market drop. Get back what I lost has been a big topic that people are responding to. Fear of potential new crash, and then it happens yesterday. Now, how long will that go? If the market rebounds, we still are going to have the scars in the memory and the increased fear. The idea of prudent risk, the idea of retirement safety, the idea of quick profits, all these are emotional triggers depending upon your product service. You know, in this webinar, we've got people who are marketing precious metals, who are marketing different types of stock products, different types of investment products. We've got across the board, all over the world, really, people who are watching. But you know what? These are key emotional triggers in this market. So the best prospects, what's working right now in investment marketing? Well, anything dealing with gold is working extremely well. We are in the midst of a historic gold boom from a response standpoint. Natural resources, same thing. Low-price stocks. So many people are anxious to get into low-price stocks than ever before. ETFs are very popular. Trading, a whole new group of people involved in trading. And then the idea of real estate investing and takeover targets. These seem to be some of the key things. But overriding all of this has been this huge group of people who are concerned about retirement safety and retirement investing and being able to withstand what could be a potential market crash. So there's been a market psychology shift. You've got the old investors who are the most conservative. They've decided now that buy and hold may not be what's best in their self-interest, and so they're looking towards more active investing. Many of them who have used financial advisors are starting to do their own investing. We have seen a shift with new investors coming in, and the new investors being much more aggressive, much more active in their investing and self-directed. And willing to be a little bit more aggressive. And then we've got this unique group of high net worth individuals where many of them in our marketing to this group of people, we were dealing with professional money managers and financial advisors, and their money was pretty well locked up with somebody else making the decision. That has really cracked open, and the high net worth individuals now, we're finding that are making a lot of their own decisions now.